Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program. Welcome to this episode of the Australian Finance Podcast.
It is wonderful to be back, Owen.
Yeah, it's very special because we've got Tom in the studio. How you going, mate?
I'm fantastic for a Thursday, yep.
Yeah, fantastic for a Thursday. Looking very dapper, mate. Looking very good.
That's it. I left the tux at home today and the floral shirt's in the dry cleaners, so maybe next time.
Next time.
So Tom's our friend from InvestSMART. What's your role again there?
Well, it's actually changed. It's investor education and product specialist now. And I think that's just because they're finally recognizing that I spend a lot of my time helping to educate investors.
Do you like it?
I love it. It's great.
Yeah.
It actually is quite rewarding.
Yeah. What's the best part of it?
It's getting feedback, because a lot of the boot campers at the end, they actually reply and give a lot of reviews and testimonials, and they say, I've actually learned a lot of stuff I've never heard about before, and I'm in a better place because I've done this course. So that's a good thing. And then you hear about their investing stories, whether they invest through us at InvestSMART or if they go ahead and invest elsewhere. They let you know, because you can always contact us and have a chat. And it's good to hear that they're actually doing something with what they've learned in the course.
That's wonderful. A big topic for today is investing during times of uncertainty. So I remember the last time we had you in the studio, it was so much fun because I feel like you have this really soothing demeanor. You can just talk people down from the stress and uncertainty of it all, which is really cool. So I'm stoked.
I think I've always been like that, but I think even when I did psychology, they obviously teach you about I guess the counselling aspect as well, and but I think a lot of us are good communicators in that respect, aren't we? Like, we know probably naturally how to communicate, take in or repeat what someone says back to you. But I think having that knowledge as well, having worked in the industry like you both have, you can sort of just see that it's a small part of a cycle. I was actually thinking this morning how in our jobs, what we tend to do is all that knowledge is there, and we literally dust off the playbook whenever there's a different cycle. So when it's a downturn, you have to pull out the book that says, it's part of a cycle. If you long-term invest, you'll be better off in the long run. But even during like a bull market, you get a lot of people who will come to you and say, the market's too high. Why would I invest now? I want it to drop. And you've literally got to get the other book and say, well, you should always be adding dollar cost averaging, but I'm sure we'll get into that.
Yeah, it's interesting how many of those same phrases we hear come up time and time again throughout all sorts of periods of the market. And a lot of people, it's just coming back to, what should I do and how can I feel comfortable taking that next step? And so it's just finding different ways to communicate that and help people there.
Absolutely. We've asked you to come into the studio and bring us one story that you've been following recently, because obviously there's a lot of stories that hit the headlines, which you just alluded to, but at any one time, there's almost one great threat or one thing that people should be mindful of or one thing that the media wants us to think about. So what's one thing that you've been following?
There's so many at the moment. I think they're all linked around inflation, interest rates. And one thing I was talking to Kate before about it was those of us who have a student loan in Australia, it's always been indexed. So, the CPI has been quite low, consumer price index. So it hasn't really mattered too much. But a lot of us have also been going to uni, maybe we don't need to go to uni, some people. But we get told to try different subjects. You got to pay for that subject, but because you don't see where it goes, it sort of sits away until you start working, earning, it's about $48,000 per year at the moment in Australia. So you don't have to start paying it back until you earn that amount. So the problem is, and it comes down to financial education again, a lot of us weren't really told how that works. We were sort of even told by a lot of universities and family that give it a try. There's no problems. Like the worst you can do is fail a subject and you can do something different, but you're actually paying for that and you're paying for it later, and it's going to be indexed. So it's going up by a certain rate of interest. And at the moment, I think it's going to be 7% or maybe even 9% this year.
I think we looked at the other day, it gets announced in May.
Yeah, in the next month or two.
Yeah.
Yeah, which is scary. Like Warren Buffett has this phrase about education and inflation. He says, the reason why investing in yourself is the best thing you can do is because you pay in yesterday's dollars for something that you benefit from today. So if you went to school 10 years ago, you would have like the cost of the education then, but you're earning from your career that is on the back of that now. But the problem is in Australia, unless you pay it off, it still goes up. It's not like in the States.
Yeah, and a lot
so it
of
just
us are
keeps going up.
doing double degrees now, or a degree and a master's, and so it does add up. And some of those courses that people do as masters are not Commonwealth supported places, so people are paying a lot more and adding a lot more to their HEC stat.
Yeah, don't even realise, as you say.
You don't. I mean, they send you the email, I think, every semester telling you how much it's going up by when you're actually studying. But I don't remember reading those. I just remember just having to get my assignments in, do any other kind of coursework. But I'm not discounting university education. Like I think that it has a very vital role. And obviously, if you want to get into certain professions, you have to do it. But I do like the idea it does teach you critical thinking, which is something that we need in society nowadays.
Yeah,
for sure.
absolutely. So we're going to be talking a lot about this idea of like what's happening in the world today and how uncertain things can be and how you cope with that, some strategies and methods that you've been teaching people to use to deal with that. But you mentioned before, like obviously HECs is important and that's a consideration for students. But what are some of the other things, maybe from an investing lens, that you've been dealing with lately? Like a lot of people coming through InvestSMART and the bootcamp. What have they been asking you?
Yeah, there's a lot of people who do come to us and they ask us questions like, is now the right time to invest? And to be fair, that's something they'll ask us, when the market's going up or down.
Yeah, I don't think anyone stops asking that question at any point in the cycle.
Yeah, and I think the reality of that is no one really knows when is the best time. Like you look at all the experts and pundits and they'll come back to you with the advice of, now is always the good time. And as long as you have the right goal, time frame, and your risk profile or risk tolerance, and then add to it bit by bit. And, the only problem with that is because it's such generic information, a lot of people don't find that attractive. And they think it's just, like we're talking about before, how you dust the books off. It's just, information you trot out. But it's actually been proven that if you follow that mindset, have a plan, and then diversify as well, you're going to be much better off than someone who doesn't do that. So when we have people come to us and ask us questions like, I'm worried at the moment because, it's quite odd because during the pandemic, we had the flip side where interest rates were really low. A lot of people who are in the retirement phase were looking at their interest-bearing investments, and they were saying, it's that low that I need to take extra risk in equities in order to get a higher return. And now there's people coming saying, I'm too high on that. I need to change it completely, go back to a smaller amount. So there's always that balance of trying to find an in-between to suit all situations. And it does come back down to that goal, time frame, risk profile. The other thing is trying to put it into perspective. Like a lot of people, they're always focused in the now, and that's the worst thing to do when it comes to investing. I can be guilty of it myself. Like I'll check my share portfolio each, well, I was going to say each week, but each day sometimes.
Oh, Tom.
Yeah. And I do that more. Look, this is my defense to that. Because I hold a lot of the ETFs that Intelligent Investor manage. I like to be, I guess, abreast of what the price is and what's happening with it.
So it's part of the job.
It's part of the job. So that's my reason why I break that rule. But just the idea that, over even the last, 20, 30 years, we've had numerous crashes and they've recovered. And each time it tends to be the case that generally speaking, the market does, recover to where it was, if not go higher over time as well. And, Warren Buffett talks about uncertainty. He literally lists off all the different, ever since like World War One, the Great Depression, for example, all the different other events. And he talks about there's always going to be periods of uncertainty. So as soon as you can accept that, then I think that does help. And it does tie it into that longer term mindset where, you try not to look at every day unless you have to. And then you have a plan where you can refer back to, have some fail safes in there. Like we have a lot of people who perhaps are not suited to a certain risk profile. And they say, well, what should I do? Should I just not invest? And that's an option. Some people perhaps maybe shouldn't. They should just put their money into a bank account and earn the lowest rate of return possible. But it's risk-free, so they won't lose it. But for some people, they might need to have a bit more liquid cash on hand so that, if they do get a bit worried, then at least they've got a bigger reserve there to rely upon, or just choose a lower risk profile. So you might be suited to a growth, but maybe dial it back to a balanced, for instance.
I like the thing you said before about a lot of people have a lot of people stuck in the current and why it's such a bad thing for investing. Because a lot of people take some years to figure this out, but when you invest now, you don't get today's or last year's return. You get next year's and the year after and the year after. And a lot of people can't think that way. A lot of people can't think, well, if everyone's panicking now, maybe next year they're not going to be panicking, so I should stay here.
Yeah. Yep.
And that's just like, unless you add some sort of plan or you have the experience, probably trials and tribulations in there, you just don't get it. So you mentioned dollar cost averaging before, and this big thing that Kate and I talk about, how do you do that in this environment? And I think one of the things that people would say is, I don't have as much money because I'm paying more on my mortgage. I'm like iceberg lettuce is going on.
Yeah, more at the coffee shop.
Yeah, so how do you do that? Like, how do you maintain perspective?
Yeah, it's a good point. My mum called me yesterday and was telling me how a block of cheese is $13.
No, yeah, we had that in the office the other day.
Oh, really?
Yeah,
Really?
Yeah. We had someone say the same thing.
Yeah, and I
feel
was
like blocks of cheese have always felt expensive, like unreasonably.
It's like record inflation for dairy.
Oh my gosh.
Yeah, and I was just amazed because I buy the sliced ones, which are very uneconomical. So I could cut back there perhaps and, use that money for investing. But yeah, it's a good point. Like, how do we go about giving, I guess, practical information to people?
Yeah.
Like, one of the biggest things I find is this is where I think education slots in really well, because the reality is that if you want to get investing and you don't have much spare cash to do so, you obviously need to look at your budget and saving. I know you've had Effie Zahos on before, and she's the queen of budgeting and saving.
We've had a few episodes of her with lots and lots of savings tips.
Yeah. Well, we've actually just added to the bootcamp a brand new module 1, which is budgeting and saving. And it's been written with her. A lot of her advice is in there. And it's hard to make it really exciting because it's very logical, a lot of it. And we touch base on, even like Scott Pape's approach as well. The other different methods that you can use to try and make it easier. But I guess at the end of the day, if you are trying to free up extra money to invest, you definitely need to look at your budget, where money's going and things like that. So, I mean, it comes down to, again, I feel like that's where education does slot in perfectly. It fills that gap because you can go to a financial advisor and pay money for financial advice, and they'll tell you the same thing. You need to look at your budget. Let's do it together. That's what you're paying them for. They'll sit with you and spend the time to go through what investments suit you in your personal situation, which is, invaluable. It's a really good idea, but most Australians can't afford that. It's, I think, about average of $3,500 for a statement of advice at the moment, and an ongoing is around about $5,000 per year. So that's when the Robo-advice comes in, which is what InvestSMART does.
Yeah.
And the idea, I think, is if we have a lot more education, letting people know what to look out for, they can make that choice themselves, whether they go with Robo-advice and get it much cheaper and, maybe the same result, or they go to a, financial planner.
Yeah.
And that's the thing. You can give someone a perfect strategy. You can give them all the tools and information. We can talk about different ways to research ETFs, but if you don't put that time in to educate yourself and build your own self-confidence, it's very hard to actually execute or make a decision on any of these areas. And do you have any sort of ideas or strategies for someone that's listening that's gone, okay, I know what I want to do, I've written my plan, but I kind of am stuck on taking that next step?
Yeah, that's I guess it falls down to that almost uncertainty as well. A lot of people will want to wait until they've got all the information at hand, and they'll keep waiting and waiting until they get more and more. And I had lunch with Effie a while ago, and she even mentioned that sometimes she does that herself. She has all this information at hand, and she'll wait too long before she leaps. And it's something that can be difficult. Like, you have to accept the fact that you'll never have the full information, and by the time that you do, that opportunity has passed. But you could also, start to look at what is holding you back. Is it holding you back in other areas of life as well? Is it something you should probably even talk to someone about? Are you someone who, hesitates on other opportunities in your life, whether it's different jobs or different other, career choices and things like that? I feel like the plan, again, if you've got a really detailed plan and you've got your almost like triggers in there of when you want to get invested and you meet them, that's a very visual and physical thing. So you're literally going through it and seeing tick, tick, tick. I've met those requirements. Why haven't I invested? And I think then go from there. I was reading just the other day, actually, I pulled out one of the old psychology books and talking about
one of your uni textbooks.
Yeah, which I paid for, and it's on my HECs debt. It's just, it's indexing crazily away. That book's probably worth about $200 now, actually. Yeah. It's out of date. It's all the old psychiatric illnesses are no longer in existence. But it's talking about even like cognitive behavioral therapy, about how you can sort of try and understand the emotions that you're going through, and then even question them and sort of say, is this rational? Like, am I actually thinking rationally? And when you go through that process, you can sometimes, get a breakthrough and a bit of insight and realize, well, I am being irrational. Why am I holding back? And then hopefully that helps as well.
Can you just maybe, I love that, by the way, dusting off the old books. I've got a few old psychology books at home. I love it. Can you just briefly, for anyone that liked the sound of what you said about robo-advice, can you just explain, like, how do you explain what it is and what it does? Like, if you're just explaining to a family member or a client or a friend what it actually does, can you just explain that in simple terms?
Yeah, that's a good idea, because a lot of people maybe don't understand what it's designed to do, who it's for. So at the end of the day, we work in the realm of general product advice. And I remember last time we were talking about that, how some people don't even understand what that means. Yeah. So obviously when you go and see a financial planner, you're getting personal financial advice, like literally sitting there hearing, how many kids do you have? You walk on crutches. How did that happen? You got an illness. How long do you want to work for? All these very personal questions. But in the robo-advice area, it's very general. So they tend to have a suite of products like InvestSMART does. So we'll have like diversified portfolios where it'll range from the standard like conservative up to high growth.
And they're made up of ETFs mostly?
Yeah, so there's ETFs inside. So they're all split up into different asset classes. So like Aussie equities, for example, we'll go and buy the ASX 200. Like we literally go and purchase the BlackRock iShares ASX 200, which has the ticker code IOZ. So anyone can do it.
Next favourite.
Yeah. Well, they've recently dropped their management fee as well. So, party time, I guess. But it's good though, because it makes everything so much cheaper even for our clients as well. So we have like those portfolios that are made up of ETFs, which again further diversify. It's like a dream within a dream, like the Inception type approach. So it's diversified and then even further diversified again. And we'll basically ask some very general questions, like, do you have a goal? What's your time frame to reach that goal? Do you know what your risk profile is? And the idea is that because you don't have, like a personal financial type employee sitting there giving that information, that brings the costs down as well. Because a lot of it's automated as well. So when it comes to actually managing the portfolios, it doesn't require too much labor. So that brings the costs down again. It's basically a way that's come up, I guess, to even sort of not challenge, but to work alongside personal financial advice, where you can come to a robo-advisor, key in some information, and it will present a suite of products that you might be interested in. But I guess the key thing that we do, like even Ron Hodge, our CEO, he really started InvestSMART because he believed that you could get the same result, if not better, with robo-advice type products like the InvestSMART professionally managed accounts. Keep the fees down, it stays in your pocket. We talk about the compounding growth, where if it stays in your pocket in your investment portfolio, it's going to grow much faster because it's invested in ETFs that give distributions like income, interest. So yeah, I mean, that's the thing. That was nothing against financial advisors. They definitely serve a role. And I was lucky enough to have a webinar with Drew Meredith from Waddle Partners.
He was recently on our Q&A episode
Yeah, he
of the
was.
podcast.
He's getting famous, Drew.
Yeah, he's so famous. Yeah, well, he came on ours and he's extra famous now. But even talking to him, like he's got such a wealth of knowledge. And when you go and see him, you'll get your money's worth and you'll benefit from his, experience and knowledge, ability to explain it in simple terms. Because that's one big thing that people probably get a bit put off with investing is, and like we're trying to do it now, like even break down the barriers, explain concepts. We do that with the bootcamp. So you're paying him for that advice and it's good advice. Or you can come to a robo-advisor if you've got a better idea of what you're after, what you're hoping to achieve, and then you don't pay as much.
Yeah, so it's kind of like you could just get the recipe and you put it together yourself. Yeah.
And Tom,
Self-serve.
I feel like the question, we did a debate a few years ago on the podcast, like the pros and cons of robo-advice. And I know people really enjoyed that. And it's probably time for a repeat this year where Owen and I went head to head on the
devil's
topic.
advocate. Yeah.
But if someone's listening and going, well, Tom, I could just do this myself. I can just open up a brokerage account. I can just buy the ETFs. Why would I pay extra for someone like InvestSMART or another robo-advice company to help manage that for me? What would be your sort of key points there?
Yeah, it's a very good question. And we get asked this by clients all the time. And even Ron, our CEO, he's always said to us that if you can do it cheaper than us and you got the time and the knowledge, do it. Like, why would you pay us extra? And the reason why you pay us extra is because, if you're not too certain about how to go about investing, if you're not too certain about, one thing we do is that we keep all those asset classes in a portfolio within certain ranges or weightings, so percentages. So, with like a high growth, it's going to be mostly made up of equities in the pie graph. That's the pie slice I'm just trying to represent. Not trying to be and the reality is that, those markets fluctuate. They'll go up and they'll go down. And if you're someone who's doing it yourself, you got to keep an eye on that. Maybe not daily, maybe like a weekly or monthly check-in. But the reality is you still have to do that yourself. So you've got to sit down at your brokerage account, work out what's the industry benchmark for, say, Australian equities in a high growth portfolio, and then decide, okay, do I trim a bit off or do I buy a bit more? Or do I then go and put it into international equities? So we call that rebalancing, and we do that for you. It's all done automatically from our end. And when we buy and sell the equities, we literally pass on institutional brokerage. So most people, when they go to CommSec, NAB trade, they might pay anywhere from $10 to $50, depending on the size of their trade. Through us, I think it's as low as $4.95 to do the brokerage. So we do all of that. We keep an eye on it. We make sure that it stays in line with your instructions. So you could literally, and we have some clients who are very well disciplined, where they will just continually add, we set up a direct debit. So it's a regular contribution. It's just going into their account like their super does.
On a monthly basis?
On a monthly basis. So like the 15th of every month, we can take it out of their account, or they can send us money anytime and just top up their account. And they don't have to worry about sitting there and going through and, finding the code, adding to it, paying brokerage, making sure it stays within the right balance. We do all of that for them. We also provide the tax statements at the end of the year. So it's in a consolidated form. You can literally, grab it, or it's all electronic, obviously. Some people print it out.
Virtually grab it and send it to your accountant.
That's it. Yeah, some people do. Some people actually print it out, send it to the accountant. The accountant's like, could you just give it to me in a CSV or Excel?
Yep.
But, that's what we do. We think we're quite good at it. We think we charge a pretty reasonable fee. I think we're still only the only capped fee, professionally managed account provider in Australia. So we charge 0.55% per annum. And then as soon as your balance gets to $100,000, the fee hits a cap. So it stops at $550 per year. And you could put in another 100,000 and you'd still only pay $550 per year, or $1 million and you'd still only pay $550. So that difference, it's staying in your pocket, in your investment account, getting the benefit of compound return, and everything's getting done for you.
Yeah, so the management fee is capped and you'd just be paying the ETF, internal management fees, and brokerage at that point.
That's right, yeah. So, if you were to hold it yourself through your own share trading account, you'd still pay those ETF fees to, say, BlackRock or to Vanguard. That doesn't change. You can hold it through us or through, your share broker or through them directly. But we do have our management fee on top, which looks after the whole, rebalancing, weighting, access to the platform itself. The option then to speak to someone like me or one of the other team that's on board. And just, get general advice.
Yeah.
Yeah, you touched on something interesting, which was the regular contribution plan and the fact that it was automatically invested, and something we've discussed a lot on the show in the last 6 months because we've just been in love with the idea of automating our finances in as many areas as possible where it's beneficial and things. There's a few areas we talked about where it might not be as beneficial, like some of those bills where you might actually be better shopping around. But are you able to share a bit about how you see the regular contribution plans and building habits as a really important part of people's finances?
Yeah, absolutely. I mean, the best example I can always use is superannuation in Australia, because we all, have to do that, and it just keeps getting added on a fairly regular basis. I think it's quarterly. Some employers do it.
You can do it monthly or quarterly. Yeah,
and I think they're actually ATOs thinking about introducing or making it a monthly contribution instead. So that happens behind the scenes. The best thing is that over time, if the market's up, sure, you might buy more expensive. When it's down, you buy cheaper, but you're continually adding at different price points, and it's happening, you're not aware of it. Well, you are aware of it, but you're not paying as much attention. So it's just happening behind the scenes, going along. It's already factored in. And it's the same thing with your own personal investment, so outside of super. So if you've got that set up, it's automated. It's going to happen regularly. You almost factor it into your life. You start to just automatically, it builds a habit. One of the best examples I can sort of add to that is we've got a product called Fund Later. And what it allows you to do is if you've got, $4,000, you can come to us and actually we'll lend you the remaining amount, which is $6,000, in order to get into an InvestSMART portfolio or a managed account. And then you just pay off that $6,000 non-recourse loan over 20 months, and it's $325 per month. So at the end of the 20 months, you've paid it off. You own the entire portfolio. You can do with it what you please. And we're finding that a lot of people that use that product keep paying that $325 because it's built a habit over 20 months. And they just, leave their BPay payment, the automatic one, switched on. They don't know, or they don't notice it because it's already factored into their daily life, into their budget, and it continues. So they find that their account grows bigger and bigger and bigger, compounding return. But that's definitely like one of the benefits of regular contributions.
Has there been a lot of people taking up Fund Later?
There has, yeah.
Yeah?
There has.
I remember we spoke about it on the show with Evan, I think it was.
Yeah. Recently after it launched last year, I think.
Yeah.
Yeah, we're sort of still getting it out there a lot on social media, letting people know that it exists. One of the biggest, I guess, concerns that some people have is that if they get invested and then the market drops, are they going to be in trouble with us, or are they going to, be caught out? And first of all, it's like a non-recourse loan. So it means that the actual securities we buy, the ETFs, if you had to leave for some reason, we will sell that to cover off the loan. And, if there is something left over, but we don't chase you for it. We don't sort of take you to bankruptcy court or something like that. We literally say, okay, we've sold off the assets. That was the remainder. InvestSMART takes the risk. The reality is that it's a long-term investment. So most people realize that they're going to be invested for, 5 years or more. So, if you are someone who thinks that it's going to be invested for a year or two, then Fund Later isn't suitable for you. But that's one way in which we try and help people get past that $10,000 minimum. And once you're in it, all the dividends that are paid into the portfolio, they are yours. And when you pay off the entire loan amount, then you'll find that they're already added into your portfolio as well.
It's interesting, the idea of treating investing like a bill, just one of those, you pay your mortgage, you pay your phone bill, you also pay your investing bill, in air quotes, and putting a specific amount on it every month. I know with one of my regular contributions, it's that set $200 that I put aside in an account every month, and it just happens. And I've been doing it for so many years now that it just has to happen. I don't miss the date. It's interesting. The more you do it, the more you go, okay, this is something I do every month. It's a non-negotiable.
Yeah, and it just reminds me of when I was chatting to Effie once, and she's probably written this in her book and all the savings tips, but she said to me, Australians are really good at paying off debt, but we're really bad at saving. So the idea is that when we're almost forced or have an obligation, we can do it. But if we're told, oh, you should put, $325 away each month to invest, a lot of us, just go, oh, not really. So that can also work in, their favor as well. So if you've got that obligation set up, we make sure that you know how much it is. We tell you the schedule on the platform, and you just keep adding to it. But you're already invested. You've already got $10,000 invested, and you're just paying it off as it goes. So that $10,000 is already in the market. It's working for you. So hopefully it'll go up in terms of, capital growth and obviously income as well.
Can you there's one final thing I want to cover on this. Can you just confirm how the fee works? Because there's a fee that's for this, obviously, which is fine. But is that a fixed fee, or is it variable? Does that change over time?
It's a fixed fee. So over the 20 months, it's what we call a facility fee, and it's $25. So if
per
you were
month.
per month. Yeah. So the $300 will go towards paying off the loan amount, and the $25 is a fee to actually offer the service and offer Fund Later.
So it's principal and interest, similar if I'm thinking home loan style. The $300 is going to the principal.
Yeah, $300 will go to the actual loan repayment. Yeah. So the thing is, though, we find a lot of people will want to pay it off early. I don't know whether they come to us as already good savers and good budgeters, but we tend to find a lot of people, instead of paying $325 per month, they'll put $625 in. So that extra $300 is reducing the number of loan repayments. So they might pay it off twice as fast. So over that 10-month period, they've only paid that $25 to us, 10 times. So instead of it being 20 lots of that 25, it reduced. So that's an option as well.
And then you could do it again if you wanted to keep, I'm assuming?
We're looking at introducing a redraw, so that if you want to then get another $6,000 loan, you can. It's in the pipeline. They're just trying to work out some of the fine details with that. But it is in the pipeline, because we only recently opened it up to other account types. Just for a long time, it was just joint and individuals.
But you could just set up a regular contribution plan if you want to keep that that habit alive.
Yeah.
Oh, absolutely. Yeah, you can.
Yeah.
But yeah, in terms of us, giving them the option again of that $6,000 loan, it's something that we're trying to figure out the details for.
Because I think it's a lot of people want to get more exposure to the market, particularly if the market starts to go up.
Exactly, especially if you can get in. We don't always know the right time to buy, but at the moment, the market seems like it's in a good place. Like if you were to get in now, then hopefully over time it would go up at a lower level. I mean, I can't pick it.
Yeah, we're not about market timing, but the idea is that the share market it's fair to say, is down. So you're getting more value for money. That's just a simple. Arithmetic. Yeah.
That's right. So, I mean, the regular contributions help too, because you're obviously trying to, not time the market, and you're getting in at different points all over the place, and then they'll smooth out.
Yeah.
But yeah, it's definitely an option.
Yeah.
And on top of regular contributions, because people are feeling a little bit uncertain, there's a bit of volatility right now, and we really want to focus on investing for a long period of time and staying invested and not jumping out and jumping back in again on a regular basis. Do you have any strategies or ways we can hack our brain to stay invested and ride things out at the moment?
Yeah, it's a really good question. One of the biggest things I guess you can tell people is the consequences of jumping in and jumping out because of your panicking. And there's some great examples where we saw in March 2020 when the market did drop because of the COVID pandemic. We had some people who saw the market drop, and it's really important to remember that it's like a house, I guess, or any asset. The share market's unique in that, it's constantly updating the price, and you can see a very quick representation of what it's worth. But that's only just I guess like a valuation. Like you haven't taken a loss until you decide to sell it at that price. And that's the same with a house. Like, it'll drop in price, but a lot of people won't tend to go and sell it just because it's dropped in value. There's a real distinct difference, which I find really interesting. So what we try and say is to some people, like if they sell it at the bottom, a lot of people will be like, oh, look, I intend to get back into the market, but when it returns to normal.
They always say that, yeah.
They always say that. And the thing is, the first thing I ask is, oh, okay, when's that? And they'll say, oh, well, when it goes back up to where it was. And it's like, okay, so you're going to sell at the very bottom, you're going to take the loss, pay brokerage. So that's the other thing. There's always a transaction cost to like getting in or out of something.
And taxes if there's a tax. Yeah.
That's it. Yeah. Capital gains. If you, did happen to buy lower, but it's dropped, it's still a bit higher. And then when you go to get back in, you're going to pay brokerage again. You're going to pay at a higher price. So your assets have to actually work harder to try and get above that point again. But the other thing is you miss out on potential dividends. Like there was a lot of clients that, they did the right thing in the sense of long-term investing, stayed the course. And in that period where they stayed in the market, their investments returned, to where they were and actually went a little bit higher. And they also were able to receive income because of that. So they got dividends, interest. So we try and tell people about that. But the other way too is, again, comes down to that plan, referring to it, understanding it's long-term. The market, the share market or any kind of market, I guess, is going to have volatility. Like it's always going to have volatility if you can accept that. And that's what you're doing. You're literally, it's that risk reward. You're investing in something that is volatile because if it was just a straight line going up, the amount of risk drops, the amount of reward would drop as well. So I guess telling people that there's other techniques too, like, even to go so far as like visualization. It's a bit out there, but the idea is that you've got your goal, your time frame, your plan. But if you can sort of even visualize and picture, what it might be like at the end of that 5-year period, get the feelings in your body. It's like NLP. I don't know if you heard of that before, neuro-linguistic programming.
No.
So the idea is that you can trick your brain into feeling a certain way. So we can actually access like images or, videos in our mind, and we can change the way we feel about them. So if you can visualize, say, the end of that 5-year, you've got your plan there, and you can visualize that, you've reached your goals, you've stayed the course because you're, disciplined. That could be a helpful method as well. And there's so much written about it on the internet. Like I probably won't go into too much detail, but
is there any books that you particularly like on this topic?
There is. There's a ton of books actually. The actual NLP was created by Richard Bandler, who was a mathematician, and he got involved with a psychologist or a psychiatrist that used to use this to help treat mental illness in people, and he realized he could apply it to everyday life. But there's so much more, like in terms of visualization. There's another book out by a psychiatrist. Her name's, I think it's Tara Swart. I can't remember the name of the book. I actually just got a hold of it the other day.
I'll Google it for you.
Oh, thanks. And it's fantastic. She started treating people in her clinic about, with, say, personality disorders and things like that, using visualization. And it's, got a lot of goal setting, different names, of course. And she found that she had such a good response to that she had, patients improving, that she left treating patients to actually go and talk about it in terms of how it can help.
Is that it?
That's it. Yeah. So it has the title of The Source, The Secrets of the Universe, The Science of the Brain. So that, a lot of people might think it falls into a pseudoscience of law of attraction. But she points out there's actually parts of our brain, such as the reticular activation system, which sits at the back. And it's designed that when we were cavemen, or cave women, cave people, and we would say, okay, I need to get the berries today. I'm going to go out there and see what happens. So they'd go out foraging and walking around, run away from some big hairy creatures. And then they'd see at the corner of the berries, and they would be like, oh, that's great. I was thinking about it, and here they are. And it's the idea of when we say want to buy like a red BMW, we just start seeing it all the time. Do you notice things like that? And it's because we've put it into our brain. We've told our brain subconsciously, be on the lookout for that. We tend to notice it. So the idea, the science behind it, from her, she's like a medical doctor. She's saying that, science can explain it. Some people call it law of attraction. You think of it and then it happens. But she's saying that, there actually is parts of the brain that helps us achieve that.
Yeah, a lot of people do that all the time. And a lot of coaches and obviously psychologists use this technique nowadays. Way you can do it with your goals is, I've said in the past that like one of the things I want to do with money is buy a farm. So what I do regularly is I actually look at farms like on Real Estate or Domain. I actually look for them regularly, even if I'm not in the market. And I might even go to inspections every now and again. Even though, again, I'm not in the market, I'm just visualizing what it would be like. And it just reminds me to check in with that goal and visualize what it would be like. And that's more powerful than anything, to be honest.
I completely agree, because your brain can't tell the difference between you actually having it and actually thinking about it. And if you can do exercises like actually physically attend a farm, do an inspection, imagine living there, then that's like way above just even sitting still and thinking about it. The F1 is in Melbourne at the moment. And there was another book which I read a long time ago that really got me into, I guess, going back to uni. And I did like commerce first and thinking about all the things I wanted to do when I got older. It's called The Winner's Bible. And I know it's not religious, thank goodness. I can't remember who wrote that either, which is annoying. But
I'll look it up for you, Tom. I'm here to help. What have we got?
So he's a New Zealander.
Kerry Spackman?
Kerry Spackman, doctor, yeah. So he's a neuroscientist, and he actually used to work with a lot of the F1 drivers. And what he would do is he would have them visualize winning the race and what it would feel like and what they picture in their mind. And he had a lot of success with that. So he put it in book form, as most people tend to do. And he basically, makes you put together either a physical or electronic book with all different pictures where you've visualized them, you feel like you're in the picture. The exact same way with the farm, like he would probably say that's an excellent technique. At the end of the day, it's goal setting. It's having a plan. He uses the word Bible because some people, think or they believe that that's their, life plan. They can follow that and they'll do well. And it ties into investing perfectly, because what we ask you to do, even in the bootcamp course we run, we literally say the most important thing is that plan. Because if you, and at least follow something, fall back on it, you've got something to work off.
And we talked about this before we started recording. There is actually a coupon code that's active Rask 50. Is that what it is?
That's right, yeah, Rask 50. It's still the same one as last time we spoke about it, and it gives anyone who enters that code onto the course when they go to buy it, there's a little spot that says have a coupon. You click that, type in Rask 50, Rask 50, and you get 50% off.
Yeah, and so, the bootcamp's with you and Effie, and it's everything you need to know about basics of budgeting, investing, and getting started.
That's it. Yeah, we talk about ETFs, what they actually are, try and break it down very straightforward. And to do the course, we've relied upon people like Effie Zahos, Alan Kohler. You also got Paul Clithrow running, who's our chairman at InvestSMART, Evan Lucas as well. We do 4 live webinars over the course of 4 weeks. And you can watch ones in case you missed them. You can ask questions, but you also get access to the subscription services on Intelligent Investor and Eureka Report. So there's 4 weeks access to that. And Intelligent Investor, for example, like I'm on there daily looking at all their stock tips and recommendations, and even understanding how to be a better value investor, because they've got so much. They literally publish all their research and talk about why we think this will happen, why this is a good thing, why this is a bad thing. And each time I read something like that, it's just like having one of the analysts with you telling you their secrets.
Yeah, it's quite unique in that way. They actually talk through their mistakes as well and where they think they went wrong in their behavioral biases or their calculations or things just changed in the industry. And there's a very active comments section too.
Yeah, very active.
I always find it quite entertaining because some of those members have been around for 20 plus years. And so they've always got a lot to say.
Yeah. We should mention, just in case anyone's wondering, even though you put in that coupon code, Rask doesn't benefit from that. Like InvestSMART is a long-term sponsor of the show, but we don't benefit in any way from coupon codes and that sort of stuff. It's all savings to you if you're listening or watching.
Yep, absolutely. We're all about trying to get as many people educated about investing. At the end of it, you're not obliged to keep signed up to any of the subscription services. They actually automatically end unless you choose to go ahead with it. And you're not obliged to invest through InvestSMART. We've actually got a lot of free tools on the website that lets you compare different funds, different ETFs, looking at shares. We're just trying to make it as easy as possible. We think we do a good job, but that will be up to
up to everyone to decide.
That's it. Yeah.
And that you can let Tom know directly what you think.
Yeah, and we do, like a lot of people who do the course, like I was saying, they I love it because the feedback they give us, and it's one of the reasons we added a budgeting and saving module, and we're going to keep adding other things. A lot of people give feedback. We really take it on board and try to improve it to make it the easiest, straightforward, comprehensive course. So it's a hard balance. But some of the things where we might have in the pipeline is even doing some kind of intelligent investor value investing course. Because a lot of people say, how do I value shares? And like there's obviously the ratios that we can all use, price to earnings ratio, etc. But those guys have a different criteria on top of that. Is the director or the CEO, do they have skin in the game? Do they actually own part of the company? What do they sell? So, we're talking about that, trying to work out a way in which we could have a secondary, more advanced course for those people who want to do it.
It's exciting.
Well, Tom, I think we want to wrap this up today. So what is the number one thing you want to leave listeners with? And I'll give you maybe 2 or 3 sentences to say it in.
I think always, with education, you can always learn more. Don't be afraid to ask questions. And, by doing some education, you're going to get a much wider idea of what you know and what you don't know. So it's education. If I had to boil it down to one word, education.
Education. Well, we're big believers of education here. And if you do want to ask a question after listening to this, hit Tom up with Bootcamp. You've got the code in the show notes, or you can click on the link to ask us a question for our next Q&A episode as well in the show notes. And of course,
it's always fun.
It's always fun.
It's always fun answering questions. So get in contact. Well, this is heaps of fun, Tom. Thanks for joining us in the studio again.
Thanks so much for having me. It's a great time.
And Kate, as always, thanks for joining me.
Thanks for listening, everyone.